Hello, chart watchers, and welcome to this Friday, March 15th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, another day in the market and some more gains. We got the Dow Jones Industrial Average up 150 points. The S&P 500 now breaking out above that 2817 area, 2823, up 15 points. Very bullish action there. NASDAQ doing the same, breaking out above prior highs, up 63 points. Russell 2000 lagging a bit on a relative basis, but still is up more than 8 points today. The 10-year Treasury yield down 3 basis points, 2.6%, just a little bit below that 2.60% area. Really a key area we want to continue to watch. This is something still very unusual to me in the market. Volatility index down another 7% today, 12.5. This is definitely a reading associated with bull markets, continuing to show that the fear is coming out of the market, and that is not good news if you're in the bearish camp. XLK Technology, the clear leader today, and you can see semiconductors breaking out, having a very, very strong day, up more than 3%. Always bullish to see the semiconductors doing well. I got a few of them here for you. You can see Broadcom, they reported earnings last night, having a huge move to the upside. Lam Research and Cree, both breaking out above prior highs, also strong. And then an unrelated company, more in the consumer discretionary area, Ulta Beauty, reported their results last night, beat on the top and bottom line, also doing very well today. Well, Mary Ellen, it is Friday. Welcome back to the show. How was your week?
It was quite good. I'm enjoying this. We're back in normalcy, I would say, for this year. Markets back up on full swing. Mm-hmm. So it's been fun to witness.
Yeah, any day spent with me probably shouldn't be referred to as normalcy, though. I'm anything but normal.
That's true. I will.
You didn't have to agree with me. That's all right. We have fun.
Yes.
So yeah, I mean, the market is having a really good day. How closely do you watch the volatility index? I mean, it's been down now 5 of the last 6 days. And last week, remember, we had that big down day. We were talking about a VIX over 18. And now here we are 1 week later. It's down at 12.5. That's been a big drop in the volatility index.
Yeah, I definitely don't focus on it, but I do pay attention to it. I know in the past I've heard you reference that 16 as being a number that needs to be paid attention to as we creep up above that. Time to get concerned. And we did last week creep up. We got as high as 18. So definitely there was a little bit of goosebumps, to say the least, last week. But boy, we're seeing it drop even lower than recent lows here today. So,
yep. Well, definitely bear markets require fear. I mean, that is one ingredient that you need to have in a bear market, and you do have in bear market. So seeing the VIX down at 12 and change, to me, really is not a good sign. Again, if you're in the bearish camp, very bullish.
Sure.
Down 12.5. All right, but let's get into it. We got a lot going on today, and we want to make sure we're able to get through everything. Here is your upcoming schedule. You can see on Tuesday, I will be looking at the average true range, taking a look at one of the indicators here at StockCharts. I'll give you a little bit of information on what it is, how you can use it, and so forth. I think it'll be very informational and educational. Then we got David Keller coming back to join us again on Wednesday. Had a great talk with Dave last week. We got him coming back in again. And then, of course, Mr. RRG, Joyce DeKempenaar, fresh off of his trip to New York City, talking to the International Traders Expo attendees. And he's going to be joining us on Thursday. So looking forward to it. We're going to have a great week ahead. As far as today, well, we're going to do what's hot, what's not. That's what we do on Fridays. We're going to bring you up to date on what we saw this week. Mary Ellen and I will go back and forth and go through a lot of companies, a lot of industry groups, and hopefully bring you up to date on some things there. Whirlpool Corp will be our first 10 in 10 stock. I plan to annotate that one along with 9 others. Play along, but you can go back, take a look at that chart on Whirlpool Corp, see what you think. And then I will annotate, give you my opinion on what I'm seeing on the chart. And then last week, we had a lot of survey responses that folks really liked what we did with this stock or that stock. So we thought we'd bring it back again. So in this segment, Mary Ellen and I will be giving each other 2 stocks to choose from. And essentially, which stock would you pick, this stock or that stock? So you all can play along with that one as well. See if you agree with us. If you don't, that's fine. That's what makes the market go round. Anyhow, let's go ahead and get started. We got a lot to go over today. We're going to start with the economic news that was out this morning. We did have the March Empire State Manufacturing Survey out this morning, and it was weaker than expected, 3.7 versus 10. Then February industrial production and capacity utilization both came in weaker than expected at 9:15 Eastern, just before the market opened. And then after the market opened at 10 a.m. Eastern, March consumer sentiment came in better than expected, 97.8 versus 95.2. So based on that, it definitely had a little bit of weakness in some of those numbers, and I think the bond market capitalizing on it. A lot of buying in treasuries, which sending the yield down again, back below 2.60%. I don't like it, but for some reason the market continues to like it. I mean, it makes common sense. Lower interest rates would be good for our economy, and therefore the market goes up. But historically, that's not the way the market typically works. Usually, as the economy gets stronger, S&P 500 profits grow. So, of course, the S&P 500 goes up. But as the economy strengthens, it generally means higher interest rates that the Fed will generally raise as the economy strengthens so it doesn't overheat. So that's the normal correlation, but we're not seeing that right now. You can see, especially here in March, a big drop again in the 10-year Treasury yield, 2.76%, down below 2.60%. That's a pretty significant drop here in just the first half of the month. We'll see what's in store as we go through the rest of the month, but we do want to hold on to that January low. All right, earnings reports out, and there were a bunch last night after the bell, and some big ones, by the way. We got Oracle, Adobe, Broadcom, Alta, as I mentioned earlier, having a great response to their earnings report, and then some other smaller technology companies, DocuSign, Pivotal Software, JBL. But one thing's common as you look down this list, every one of them beat their earnings expectations. And by the way, while I'm mentioning earnings expectations, we do have a poll running today, and we'd love for you to take that. Mary Ellen had a great idea to see if you all know which areas of the market have seen a higher percentage of companies reporting better than expected results. Gave you different sectors to choose from, and we're going to discuss that at the end of the show. So definitely check out the poll and give us your thoughts on which group you think has been the best in terms of earnings reports. All right, as far as some of the individual stocks, let's first start with Oracle. They did beat on their bottom line. So let's take a look at the chart first. You can see that we did have a gap down. I do have one concern when I look at Oracle, and that is that negative divergence that's in play. So they had some pretty good news. They did beat on their top line, $9.62 billion versus $9.59 billion. Bottom line was 87 versus 84 cents. They raised their dividend 26%. So it went from 19 cents per quarter to 24 cents. So really good raising there of the dividend. Stock did gap down, though. I would not be surprised to see it just consolidate here for a bit with that negative divergence, higher prices, lower PPO. I think, though, after we sideways consolidate, especially if we get a 50-day test, I suspect we're going to see higher prices with Oracle. Let me pull up the relative chart as well. All right. Of course, Oracle resides in that software space, which has just broken out to new highs. Oracle also broke out above that double top we saw in the fourth quarter of 2018. So we have been seeing some decent strength, just kind of going along for the ride. Software breaks out, Oracle breaks out. But because it's in a strong group, that means it's outperforming the S&P 500. So that is a good thing. Let's take a look at a few others that reported earnings. Adobe beat top line, beat bottom line, but guided quarter two earnings per share lower. So this had been a leader in software for quite some time, but notice it now is trading at a 52-week relative low to its peers after it gapped down today with earnings. So while the group is broken out, you can see Adobe has not, and that has been leading to some relative weakness. So we shouldn't be overly surprised by the development of the lowering of guidance for the next quarter. Still, Adobe remains one of the great companies out there, especially in that software space, but we're not seeing the leadership right now. So I think there are better software options out there. AVGO, Broadcom, big breakout here. beat on the bottom line by a mile. They guided in line, and their top line actually missed a bit, but it still resulted in some pretty good action here. You can see Broadcom breaking out. Semis have been extremely strong, and the breakouts enabled AVGO to outperform the S&P. All right, Alta. I mentioned this one in my blog yesterday. If you read my blog, I was talking about seasonal patterns. And so I'm going to pull up the seasonal pattern here for Alta just to show you. Thought it was interesting on the day of earnings to point out that over the last 13 years, Alta has gone up in March, 92% of those Marches. So 12 out of 13. And you can see their average return during March, 8.2%. So when we consider that, and then we go back and take a look at the action today, stock's up 9%. And here we are in March. So having another really nice day for Alta, breaking out above the consolidation highs. I think this one looks really good technically. All right, DocuSign, DOCU. Let's pull this one up on a relative basis. They beat top line, beat bottom line, guided next quarter and fiscal year 20 revenues higher. Stock just kind of doing okay today, down a little bit, but look at the move it had heading into the earnings. So while it had been a relative laggard, you can see over the last 3 months, we've actually been moving higher on a relative basis. So I think there was some good news built in. DocuSign came through with the good news, seeing just a little bit of sideways consolidation here, but I believe the stock will continue to outperform based on everything I'm seeing at this point. PVTL, Pivotal, missed on their top line, beat on their bottom line, guided lower. The stock did go back down below the 20-day earlier, trying to hold that level. This is one that had been showing a little bit of relative strength the last 45 days or so, but still well off of its earlier relative highs. And again, market not overly excited by their report. JBL, missed on the top line, beat on the bottom line, guided in line. And you can see relative to its peers, it's just kind of been going sideways. Not really a leader, not really a laggard. And so versus the S&P, kind of the same thing. Not too excited looking at this one. And I did want to mention one more, Turtle Beach. We talked about this one yesterday, and I did mention that the move to the upside yesterday might be a good thing. I had no idea this was a company coming out with earnings, and one of the reasons why I do not like to trade stocks into earnings. You can see here, did beat top line and bottom line, but they guided their earnings per share lower, and the stock down 16%. Needs to hold this $12, $12.50 level, or then it likely faces going back to the gap support closer to about $11. So those were the earnings reports. I did want to just mention, when we go back through, and we're going to talk about what's hot, what's not in just a bit. One thing that's hot is the Dow Jones, which is now up 206 points, and the NASDAQ up 77 following suit. But if we look at the sector summary today, I just wanted to point out that technology is by far and away the best performing group. And if you click on that, you can see semiconductors really topping the list. Also, Apple's been having a really strong week after breaking out. That's continuing to lead computer hardware higher. Now, Mary Ellen, I think you have something to share with everybody. And I think this is a common kind of a problem, if you will. When you're in a stock and you get out too early, and
yes,
watch it go higher.
Oh my goodness.
Yeah, what do you do?
Yes, I am going to share with you. It's called The One That Got Away, and it's fairly recent. And I'll just review some of the action in the stock, certainly that shook me out. And then we can have fun looking at how much higher it's gone since then. So what we're looking at here, this is a daily price chart. The stock is Planet Fitness. PLNT is the ticker symbol. And they, for those of you not familiar, they have a string of gyms that individuals can become members to. It's a wonderful recurrent revenue stream. So by and large, it has high growth prospects. But what I'm going to do is take you, this is a stock that I picked up back in here. I'm taking you back into the beginning of this year. The stock did start to pick up in line with the broader markets. So we had a nice breakout and it occurred on volume. So the stock looked really quite compelling. Analysts were raising estimates. But as the stock advanced going into January, into February, it really was in a go nowhere environment. And if you think about January and February, it was a terrific period for growth stocks. A lot of certainly softwares, a number of areas were really picking up, but this really languished. And during standard, more normalized markets, if a stock is going in a back and fill type environment, normally that's fine. It's finding support above this upward trending, now flat 50-day simple moving average, just marking time. So perhaps for a longer term investment, you may have stuck with it. But over here, the stock came out and reported earnings. This is at the end of February. And if you look at the action, because the earnings really were not that particularly bad, they came in 42% year-over-year growth, ahead of estimates, but the stock faltered and it dropped. And I should move this arrow, but it did break below that 50-day simple moving average momentarily. The RSI did turn negative, and then the MACD was heading downward. It had that black line down through the red back here, and then trended downward as the stock flattened. And so I just thought, well, I want out. It's not performing with the markets. It had good numbers, but that dip below the 50, the RSI dropping, was really quite concerning, particularly with any number of stocks around it really doing quite well. So of course, here we are. We can see that the stock, subsequent to this drop on earnings, has recovered. So take a look at this bounce back up above that 10-day simple moving average that occurred on volume. And of course, the stock is continuing to find upward support at this upward trending 10-day simple moving average. It's a little bit overbought. You can see the RSI is above 70. The MACD is still very much in an uptrend, so the stock absolutely looks super. There was one other view that I was going to share with you of this that was also concerning. Sometimes I will drill down to the intraday version of a given stock to get a little bit more in the way of insight. So this action was also going on right into earnings, where the stock would essentially gap up and then fizzle and trade into the close, another gap up and fizzle. These are, each bar is 1 hour. This is a 60-minute. So this was other action in the stock that was unnerving and concerning to me. But again, of course, we can see that the stock did rebound quite nicely for a nice significant advance. So in looking at this stock, what I did want to remind people is the fact that oftentimes some of these stocks will just undercut their 50-day simple moving average to, in essence, shake out those weaker hands. I'm going to show you another one that's in a similar consumer discretionary area that had similar action, but I actually stayed with this stock. This is Dollar Tree. We're also looking at a daily chart, DLTR, and this had rather similar action where it had a nice uptrend in line with the broader markets, sat out, and this is true of a number of these consumer-related stocks. But in this case, the stock pulled back to that 50-day simple moving average. We did have that RSI dip a little, but I was more forgiving with this particular stock because it participated more on the upside during that January-February period. It had shown prior areas and periods of strength that gave, for me, the stock more of the outlook was more promising, that it could just simply pull back. This is their release of earnings, and the stock gapped up quite nicely following that. We really did not undercut that 50-day. So, but more importantly, the action going into that pullback was what allowed me to stay with DLTR despite this brief dip below on that RSI. So I'm going to go ahead and leave it with that, the one that got away. Let's go ahead and move on. There is so very much that we can cover on the what's hot as opposed to what's not.
Hey,
Oh, sure. Go right ahead.
Yeah, I just wanted to interject for a minute. First of all, Thanks for sharing that on Planet Fitness, because I know I've been in that situation. I'm sure just about everybody watching has been in that situation where, you get to a point, and I think that getting out of a stock that keeps going up is much better than staying in a stock that keeps going down.
Mm-hmm.
So first I would say that I think you have to have your disciplines in place. And obviously you're watching the stock. It didn't do what you wanted it to do. And so you got out. And I think that is still a good lesson for everybody. But what do you do? I mean, do you ever feel bad about getting out of a stock because it looks like it's breaking down, then getting back in at a higher price?
Not at all. Nope. I will get back in, particularly if the dynamics are still fundamentally and technically sound. I'm constantly revisiting, and that's true when you're trading or when you're trafficking in these winning stocks, these fast movers. You'll see these same names just circle around. They have top management in place, products that are in demand. They have dynamics that are going to sustain a continued upward move, and periodically they'll pull back. But yeah, I'll get back in for sure.
Okay. All right. Well, I'll let you take it away and start the what's hot. What you got?
Yeah. So as mentioned, a lot on the what's hot side. So first thing we can start out with is some of these computer software. And certainly Tom talked about Adobe and some of the others that have been leading the market higher. This certainly is a name that has been a real winner. It's Twilio, TWLO is the ticker symbol. I can pull up a weekly here, and we can see the stock is up another 11% this week. And the reason this move is continuing upward even further beyond its advance earlier in the year is because analysts are raising estimates higher. So that has been a big reason for this move, certainly this week. Let's go ahead and take a look at another software stock, and the ticker symbol is SHOP. These guys, software company again, they provide software for individuals that want to start their own business, and they have a full platform providing you with website, sales analysis, and so forth. The stock is up about 9, almost 10% this week, and we can see this is a nice gap up here. The company came in with good earnings. This week's advance is being attributed to the fact that the COO was on TV. He's touting a lot of celebrity users, celebrities that have their own businesses, Kylie Jenner, the youngest billionaire, Drake, and then also talking about Canadian pot sellers are also using the site. So that got people reinterested in this particular stock. Let's take a look at another software stock. This is a smaller name, APPF. And this particular company, we can see that it is what I would call a turnaround. We're looking at a daily chart here. The stock is up almost 9% on the week as it's breaking out of this shorter term base. And this is a company, they provide cloud-based real estate solutions also to law firms. And they just came out with really quite good numbers. And so what I did want to point out to you is this type of turnaround pattern. Let's go ahead and look at a weekly chart of APPF. You can see the stock dropped in line with the broader markets, really didn't participate in the broader market rally, certainly within software, but over the last couple of weeks, certainly this week, we're seeing a nice break back up above that 200-day simple moving average. Your RSI is positive, MACD trending upward into positive territory. So this particular stock could very well easily go on to form the right side of a base and carry on. So it's looking quite bullish here. ZEN, this is Zendesk, another software name, up about 8%. This company, they provide systems for tracking customer support tickets throughout all types of platforms, wide adaptation here. We can see the stock has had a very nice move here in line with the broader markets as well as with software. But looking at it today, we can see that the stock had about a 5-week period where it consolidated this advance going into this 5-week period. The stock is breaking out of this flat base with a positive RSI. MACD had that positive crossover, and it's up there in positive territory. and I can go ahead and move on to a different area, semiconductors. We talked about them. Let's take a look at NVIDIA. And this particular stock is up 10%, actually 13% on the week. They purchased another semiconductor company, Mellanox, which is also up about 8%. Let's go ahead and move on down into some of these retail stocks that have really picked up this week. And the first one that we can take a look at is a smaller company. It's called Vera Bradley, and this absolutely unusual looking 38% advance. And so I'm going to go ahead and pull up the daily on this chart. And the stock, this is a gap up on earnings. They came out with very good numbers. They gapped up 21% on the news. And what is happening here is, in addition to decent numbers, the company came out and announced that they're going to be closing about 10 of their brick and mortar stores. They're opening 6 outlet stores. That's where their big growth in sales are coming from. The market likes it, and it's continuing. This is what we've seen in a number of stocks this earnings season, where they have this huge gap up 18% here, but they continue to advance. And very well, you could see some short selling as short squeeze as also propelling the stock higher. We can take a look at another retailer. That's J.C. Penney. Now, this one is really surprising to me because the numbers on this stock are absolutely dismal, but it's up 13% for the week. This is a weekly price chart. We can go ahead over here, take a look at it daily, get a little bit of a different view of this turnaround action that's been happening. This is another company that, while the numbers here are dismal, they have made some announcements. They're exiting the furniture and appliance divisions and instead focusing on their core business. Analysts like it. They're upgrading it, and the stock is continuing to climb upward despite, as I said, very dismal on the earnings, negative outlook, but the street likes it. Here's Stitch Fix. This is another retailer, came out with pretty decent numbers. This company is the parent company for Men's Warehouse, Joseph A. Banks, and actually, we can see that is not the case for this. That is a different company. But Stitch Fix is a company that gapped up 71% on year-over-year earnings growth. And we can see where the stock is really right now kind of filling that gap back in. So it's not sustaining, unlike VRA. So it's not as dynamic looking. So I'm going to go ahead and leave it at that. I know, Tom, you have a couple of stocks that are also looking quite constructive.
Yeah, I'm going to move over into the energy space. And I thought what I would do first, if you haven't really been watching, crude oil has broken out and is doing has been doing exceptional. And really, this week was is worth mentioning here. So let's take a look first at the crude oil chart. And when you look at it, take a look at this 20-day moving average that has been holding throughout this move to the upside. Really liked this candle about a week ago. This would have been back on, this was as of yesterday. So this would have been back as of last Friday. So we had the big drop on crude oil intraday, but we came back up, we held, and then we broke out. So crude oil, when you look back, is now trading at its highest close. Yesterday was its highest close since the second week of November. That is good news for energy. Anytime you've got crude oil prices going up, that's generally a good sign for energy. So areas of energy that have been benefiting, maybe not directly from higher crude oil prices, but here we have renewables. Renewables had a very strong week, broke out to new 2019 highs, pulled back here the last couple of days, not participating as much, but still looks very, very strong. And I'll also pull up a couple of other industry groups, and then we'll get into the some of the stocks. But the DJUSOS is production and exploration. You can see not exactly a healthy group, continues to be in a downtrend, but certainly deserves to be mentioned among the what's hot this week. Last 5 days been moving higher, trying to get through those moving averages. And then the oil equipment and services group, the DJUSOI, same thing. Not exactly a great group. Look like we're rolling over. Coming back up. We've been hot this week. Got a lot of work to do. This is not necessarily a group that you just want to go jumping into and going away for 3 to 6 months, because this has not been a great area of the market. but it is a group that's performed really well this week. So within these groups, I want to start off with the renewables. Now, this is a small company, but what a week it's had. Plug Power, huge move up. Look at the volume coming in. Today having a rough day, but there was a big breakout around $2. And once we got through that number with the volume coming in, the company soared. I would be looking maybe for a pullback. Notice that rising 20-day is right at that $2 level. So for those of you who really like some action in the market, I think Plug Power is one that's given you a bunch of action this week and may give you more action ahead if it pulls back to that key support level. Jinko Solar, JKS, another one, did sell off, move back close to the support level where it broke out on volume in mid-February. After settling there, it's had a pretty good week here, as you can see, getting back up and above that $19 level. Enphase, I don't know if you remember this one from last week, Mary Ellen, but I gave it to you as one of the, or I think it was in our poll, which showed the top performers of 2019 and which ones we thought might continue to go on. Enphase last Friday had come down, tested this 20-day moving average, and look what happened, bounced right off of it. Stock was up at one point this week, probably about 17% or so before we pulled back a little bit today. So ENPH having a strong day. Within production and exploration, DVN, Devon Energy, beautiful move off the 50-day moving average. Not a great chart, but I do like the volume, the gap up with that shooting star off of an uptrend, though, that did portend weakness ahead. We've seen that. We went down to the 50-day, and this week we bounced off of it. So a really nice week for Devon Energy. ECA, this is in Canada. Another one bouncing off the 50-day moving average last Friday. He's come back up, challenging some overhead resistance. WPX, this is WPX Energy. Not exactly a great-looking chart. It did bounce off support, trying to get back up into this range. Like I mentioned, the overall indices that these are part of, not a great-looking group, but they're at least showing some signs. Let's see if we can get some confirmation on some breakouts. Holly Frontier, HFC, moving up. I don't like today's candle. I don't like this reversal if it sticks into the close today. This was one that was all the way back down near the December lows. Got a little bit of an oversold bounce. But again, if we fail to hold this breakout above the 20, I'd be a little careful with the overall trend being lower. And then the last one I have for this group, let's take a look at Apache. And you can see Apache trying to make a breakout above these prior highs. We are putting in higher lows. As long as that pattern continues, I'm okay with it. But again, it's not in a great group. Moving on to the oil equipment and services, let's look at KeyCorp. Actually, I think I got the wrong ticker symbol on this one. I don't think KeyCorp is part of that, is it? Let me look at this one. No, that's a bank. That's what I thought. Not KeyCorp. I'll tell you what, we'll skip. We'll go to IO. This one is Ion Geophysical. Here you can see the stock has had a really nice week, bouncing off that 20-day moving average. And this one you can see definitely has more of an uptrend in play. So when you go down and you look at the relative strength, look at it relative to its peers. So if you're going to go into a group like this, at least get one of the leaders. And I think IO has been doing just that. Some others in the space, you got RIG, which is Transocean. Not one of my favorites. We did get up above that $9 level on some volume. So that's at least a start. But I would watch $8. We were in this range, $8 to $9. I would not want to lose that to the downside. FTI, and then I'll finish with Baker Hughes. But FTI, which is FMC Technologies, also a very strong week, but mostly off of oversold and not exactly appealing technical conditions. So I think we got to get more of an uptrend in play before I'd be interested here. And then that last one, Baker Hughes, you can see BHGE. This one is performing very well relative to its peers. Look at this relative strength. So if the group ever begins to move to the upside, in my opinion, you want to look for these companies that are already beginning to show relative strength versus their peers. If I was looking for an energy stock, Mary Ellen, I'd look at a company like a Baker Hughes because it is at least showing these signs of relative outperformance.
You're right. A number of these bigger energy guys are starting to pick up. You can look at a Chevron CVX and you'll see that it's up almost 3%. But you're also right in your earlier comments that energy and some of these oil-related stocks have been a tough play this year. They're not participating in the rally, and the volatility is just inherent. It's hard to get excited about them when there is so much else that's really going on all four cylinders.
Exactly.
So Yeah, so I'm going to go ahead and review a couple more areas that are hot. And one is within healthcare. If you were to look at the biotechs, the IBB, biotech stocks are up 4% this week. And I can tell you it's super explosive. For those of you not familiar, there are over 550 biotech stocks that are listed and a lot of explosive pops this week. This is KALV, KalVista Pharma, pharmaceuticals that is on here right now. We're looking at a weekly chart. The stock's up 32%, and they came out. They do discovery and development for small molecule protease inhibitors, but basically inflammation is what they are looking to attack. They are advancing as far as going through their various phases. The stock is breaking out of this base. Take a look at the volume here. Now, I know you're thinking it's up 31%. How much further can it go? But it certainly is looking bullish here. Let's take a look at another biotech stock, EXAS. And this is a company that certainly has been around for a while, Exact Sciences. It's up 13% this week, and they specialize in early detection for cancers. And one of their products more recently is a non-invasive. Sorry?
Sorry. I was kind of looking away, but I don't think you shared your screen because I'm still looking at my screen, which appears to be up.
Tom, I want to say thank you. I'm going to go ahead and pull up that prior screen, the stock that we were looking at. I think I just got a little overexcited there. This is EXAS. I'm going to pull up KALV, the first one that I was mentioning before, so you can take a quick peek at that. We talked about the bullish coming out of a base. So let's go ahead and do that. This is 32%. And coming out of this nice base on big volume, very bullish. And again, though, it has already had a significant move. Let's go back and take a look at Exact Sciences. This particular company, again, I was talking about early detection for cancer. They have a product called Cologuard, non-invasive DNA screening for colorectal scanner. This really cancer, and this has analysts really super excited. The stock is, they continue to revise estimates going forward. ARRY is another bigger name, certainly within the biotech space. It's Array Biopharma. And we can see this significant advance here. They also are looking at early detection. They have a product out now for melanoma that is super, very wonderful product. They are now working on phase 3 product for other cancer products. Other cancer drugs to treat patients with cancer. So we can see that the stock is another one that is emerging out of this space. It's up about 10% for the week. The RSI is trending upward. Now your MACD is languishing a bit here, but it's up above this net neutral zero. So it remains in positive territory. Another one that we can take a look at within the biotech space is ASND. And this particular stock gapped up back here in the beginning of March. They came out and they advanced to phase 3 for a human growth hormone for children. And actually, this gap up here has everything to do with the company introducing a public offering, 400 million in ADR. The company's based out of Denmark. So what I wanted to point out here is this big gap up. It pulled back just a little, barely to that 10-day, but it's clearly finding upward support at an upward trending 10-day moving average. RSI is a little bit overbought, but certainly still in positive territory. Let's go ahead and move on because there is certainly one area within this healthcare that we have to take a look at, and that is those stocks that were hit last 2 weeks with the Medicare for All bill. This is HQY Healthcare Equity, and they have a platform for new members. They provide healthcare. They work with employers. The stock dipped, but we can see that it's rebounding and it's poised to break out of this base. RSI is positive. MACD is as well. Let's take a look at a big gorilla in that space, UNH, and that is United Healthcare, a broad healthcare provider that really got hit quite hard on the possibility of a Medicare for All bill. So we can see now this stock fell for the past 2 weeks. It has not regained its uptrend. The RSI is not quite positive. This price action needs to break back above this 50 and 200-day moving average. We had a positive crossover on the MACD, but we're not up above zero yet. So we are not out of the woods, but any number of these health providers are trying to find their way back, if you will. And we can take a look at Molina. This one is a bit in a more positive position. It didn't sell off quite as much, so it's potentially, they're trying to turn, they're not showing a lot of oomph, if you will. We can see that over the last 3 days, they're just marking time, but that is an area in healthcare that has picked up this week. So, Tom, I know we're going to talk about some of these what's not area. If you want to take it away.
Yeah, I thought what we do is just start with a couple of industry groups. And, the thing is, the market was very hot this week, so there's not a lot of weakness out there. A lot of it is just the fact that there are areas maybe that haven't gone along for the ride and are just lagging on a relative basis. So I'll start with the furnishings group. And you can see here the last couple of days with the market moving up, it really came up, tried to get through the 20-day, couldn't, and is pulled back. So you can see over the last 5 days or so, this is a group that is lower, and a couple of stocks within the group that might be interesting to take a look at. Number one, Mohawk Industries. Now, this is a stock that had been in a downtrend for a while, and I'm going to stretch this out to a 1-year chart. But you can see off of this downtrend, it's had a couple of big gap downs. Well, we finally got a gap up, and we've pulled back. Notice gap support is just below this $130 level. So I'm going to excuse the stock for its weak performance this week, as long as it holds on to gap support. But if it fails, if you see the stock trading back down below, say, 128 or so, I don't know, with an overall downtrend in play in a market that's been going higher, this has not been a huge bounce off of the December low relative to the overall market. I mean, you can see how badly it was performing for so long. So this one is kind of, I think this isn't a key pivot area for Mohawk. Leggett and Platt is another one. Now, this one to me looks a little better. This is a stock that just broke out recently. So this pullback getting close to gap support is in a stock that has been showing much better relative strength. So if I had to pick between the two, I'd go with Leggett on this pullback, but both deserve watching. Autos, another area of the market that this week just did not really participate. Went up, tested that 20-day moving average, failed, rolled back over. So really right back at where we started a little over a week ago, and we could go back to the lows in January. Autos, over the long term, this is a group that outside of maybe Tesla or probably just Tesla, maybe Ferrari, those are probably the only names I trade because the others just, you cannot rely on any kind of movement. I guess you could say that about Tesla this year because, stock's been coming back down so far. But when you look at the autos, they haven't been very strong. And if I pull up Tesla this week, we did see it fail at that 20-day moving average, come back down. It's trying to hold on to this support. The big support, though, is down at this 250 area where we saw major bottoms established twice back in 2018. We want to watch that level if it does continue to move lower. Hog, Harley Davidson in this group, you can see having a rough week, but technically looks a little bit better. It seems to be in an uptrend. Watch the lows established yesterday. I wouldn't want to lose that area of support. And then I mentioned, a company like Ford. I could pull up a long-term monthly chart and just bore you to death. This is how can you trade this thing? I mean, it's right where it was 7 or 8 years ago. What bull market? You look at Ford. So when it's down, I mean, I just don't look at this as an opportunity. I'm not a big trader of these auto companies. Last group I just wanted to mention was the Dow Jones Pharma Group. And they didn't have a bad week. They just didn't really participate. So when you look at their chart, you're going to see we went up earlier in the week. We've come back down. We are rebounding a little bit now. So maybe we're still up a little bit for the week. But overall, this is a group that really hasn't participated. And the one stock I know that had a rough week, one of the larger companies was Teva. And actually, it did bounce back last couple of days, but it is starting to show a little bit of weakness today. This one's been in a downtrend really since the beginning of February. So those were some of the areas of that were not hot. Why don't you take it away, Mary Ellen, and what else is not hot this week?
Yeah, and I think I mentioned this to you earlier. It was really scraping the barrel to try and find what not hot names, but they are out there. The first one we're looking at here is Eli Lilly. The larger pharmaceuticals are kind of sitting out the rally this week, and the stock is down probably only about 3. It was down 4% into the open today. But I really could not find any kind of bad news. JP Morgan came out and upped their price target to 140. The stock is currently at 123, and but I would call it maybe just a pullback after this significant uptrend here. The stock is simply just pulling back a bit. RSI is remaining positive. MACD had a negative crossover, but it's still up here above 0. So just marking time, I would expect this stock to reverse and resume its uptrend. Another company, certainly within healthcare, there was one other one that is a little bit smaller. TCMD is the ticker symbol, and this is a tactile system medical products. The stock is just dropping here. It's down about 13%, 13% this week, and all about analysts lowering estimates on the stock. Take a look at that big volume. It seems to be having buyers coming in over the last 2 days. It may find support here at this upward trending 200-day simple moving average, but we have some negative divergence here with the RSI now in negative territory and the MACD. So it will have work to do before potentially reversing this downtrend. Let's take a look at some of these retailers that got hit. These guys are still trickling in with some earnings. TLRD, this is earlier I had mentioned the parent of Men's Warehouse and Joseph A. Banks. Take a look. The stock is down quite a bit, 25% today. Yesterday, gap down, dropped on earnings. Same store sales, revenue, everything was negative, and then the company lowered guidance for this year and next. So this is very much these other gaps down were on poor earnings. So the company is really in quite a bit of trouble. DKS is another retailer. This is Dick's Sporting Good, another drop down, again, falling profits, falling same-store sales as well as revenues. We can see the RSI trending negatively now. The stock's price is below these key moving averages. And then your MACD is now into negative territory, so more potential downside there. Dollar General is another retailer, a discounter. And interestingly, it's bouncing a bit today. Now, what I want to point out to you here is the stock on the news dropped 5.5%. Earnings were actually quite good for the company, but they guide it lower. That's just a bit lower, weaker than anticipated, and the markets did not like it. But what I wanted to point out is yesterday's action on volume. The stock got down as low as about 109, but buyers did come in. So it closed the day in the upper portion of the trading range, huge volume that is bullish. And we can see the stock is up about 1.5% today. So we could see a reversal here, but for my work, we're still below this 50-day simple moving average, and that is concerning. We need to see a little more. The RSI is negative before turning positive, but net generally bullish action on the gap down. I want to move on to some of these biotech, aerospace defense, and of course we can't leave the what's not hot without talking about Boeing and its distressing news. The stock was down 11% going into today, so it's probably down around 9% for the week. The stock, you can see where this huge volume here, and I'm actually surprised that it's finding buyers. We can see here that it is potentially falling back right up to the top of this prior base. So when stocks normally pull back, this is a very standard area that it would pull back to. It'll be very, very interesting to see if it continues to find support here from which it can bounce. But within aerospace defense, there are a number of other stocks that are also getting hit because they supply to Boeing. And with the grounding of their MAX 747 jets, these guys are getting impacted. Nice to see they're seeing a bit of a bounce. DCO, this is Ducommun, a daily chart. You can see the stock dropped. It was down about 5% into the open today, but that RSI never really got negative. MACD is still in positive territory, so we could see some support coming in with these guys. One other last name that we can look at is Spirit Air, SPR, and this is another Boeing supplier that got hit a little bit more negative looking. That RSI is now down below negative territory, and the MACD, we had that negative crossover poised to break down below, and it's really just in a quite volatile state, but your higher volume days are on the downside, so that's not positive.
All right, I got a question for you, Mary Ellen.
Mm-hmm.
Do you ever buy gold? Not stock, but I'm talking gold.
Right. You mean the physical gold?
Yeah, or actually GLD. I mean, do you ever buy?
Yeah. I don't. I'm not a gold bug. I'll tell you, it's not an area of the market that captures my. Periodically, it will look compelling, but not my cup of tea, to speak. Yeah. For the most part. What are you thinking?
Not anything.
just being a curious cat.
Yeah, I mean, gold is just one of those things. I try to outperform the S&P 500. So I always use when I talk about something, I always talk about it in terms of whether or not I think it's an area that can outperform the S&P 500. Because if it can't, I'm not interested. And I guess with gold, the thing that still bothers me is that we are in an uptrend in the dollar. We've been in an uptrend in the dollar since 2011, in my view. If you go back and take a look at the dollar index, and the lows just continue to go higher and higher. So until that trend breaks, I just find gold, silver, any of the metals, energy, those areas to me just seem to have headwinds from that higher dollar. And so it's just an area that I really just avoid. It's not like I won't trade them in a rising dollar environment because I just don't expect that they're going to outperform the S&P 500. And so part of my problem with gold is, it was in that nice little uptrend, as you can see, going into the end of 2018 and early 2019. But the S&P 500 in 2019 was actually going up faster. So even though gold really looks good on its own on this chart, it still was not performing to the extent that the S&P 500 was. So I was just...
there is one stock in there that KL is the ticker symbol. Do I still have?
Yeah, pull it up.
Oopsies, it's reverting to KLAC. But this is Kirkland, and it's been kind of a darling, certainly among gold stocks. The numbers are 51% earnings growth this year, 11% next year, but analysts are raising estimates. So I will say this certainly has been one of the better ones, and again, a real darling of the gold community, if you will. But I think it's more of an aberration, more of an outsider than not. And they're in Victoria, they're in Australia and Canada, and have a lot in the way of discoveries and finds that are propelling the stock higher.
Awesome. Well, there's always outliers, and no matter what group you're looking at, there's always something that's working somewhere. So you can definitely point to specific examples, but I think you mentioned earlier, it's just, when we were talking about energy, it's just a group that's not been very strong. So trying to find winners
exactly
is very difficult. But
yeah.
There you go. There's the areas that Mary Ellen and I covered today on the what's hot, what's not. Hopefully we brought you up to date on a lot of the happenings in the stock market this week. And we're going to go into the 10 and 10. So I'm going to start. I think our first stock was Whirlpool. So let me get going with Whirlpool and make sure I have the most recent price. Okay, when I look back at Whirlpool, first of all, I see the huge gap. And this is the price support resistance line. I know Erin, when she's on the show, uses it quite a bit. I like it a lot. I think it's just one very, very simple annotation tool that you can use at StockCharts, and it just really paints a picture in my view. So when you draw this line across here at about $132, you notice that was the key area where it had gapped down on heavy volume back in July. When we rallied back, we got back to 132, couldn't get through, went right back down. Finally, on big volume, where'd we go? We get back through that 132 level, which I think is a character change kind of a candle. We pull back, our first significant pullback here in early February. Where do we stop? 132. And today, the stock is down to what? 132. So I like it here. I think that the stock on this pullback, I know it's having a bad day and it looks horrible relative to the market, and it may break down. But the one thing I like about it is that if it does break down, I don't lose much. It is a stock that's been uptrending. I'm not saying Whirlpool is the best stock out there. I see a lot of other stocks out there that are much better. And when you look at its peer group and compare the peer group to the S&P 500, it was horrible through October, rebounded into the early 2019, and now has rolled over again. So this is an area of the market that's not really getting a whole lot of love. And as a result, Whirlpool is going to be a little bit challenged because of that. So for those reasons, I don't think Whirlpool is going to be one of these great winners in the market. But just looking at this stock, specifically based on its absolute chart here, I think this is a key area. I think this is a key pivotal area. If we were doing this segment turning point, Mary Ellen, which I think we've done, I know I've done with Aaron a few times, it's a key turning point for Whirlpool. Either it's going to bounce off of 132, or I think you let it go, one way or the other. So I just think this is an interesting level. I wanted to point that out.
Very good. SQ is the next one, Square.
Yeah, Square has been a little bit of an underperformer. Look at the financial administration stocks going back up and breaking out above that September high. And look where Square is relative to that September high. A little bit of negative, not negative divergence, but a little negative relative performance, if you will. So Square, relative to its group, struggling, holding so far this relative support line. I'm going to say around 0.145. I don't want to lose that. I just think if you're going to be in this area, you want to get leaders in the area. Square was a clear leader up until September. And from there, it has been trending lower on a relative basis. And even though it's gone up nicely this year, it's struggling. It actually topped out on a relative basis back in January and hasn't been able to top that. So it was back at this high. Look at how much further financial administration stocks have gone up since the fourth week of January. And look at what Square's done. It's been flat. It's done nothing while the group and while the market keeps going higher. So for that reason, I'm going to be a little bit nervous about owning Square. Something's going on, I feel like. The way I use this is if the stock were to break down below, say, the 50-day moving average. I know that's something you watch closely, Mary Ellen. To me, the fact that it's underperforming its peers, if it loses a key technical level, I would not be trying to make exceptions or, trying to come up with why it's doing it and saying, oh, it's okay, I'm gonna wait a while. If it's underperforming and it makes an absolute breakdown, I'd be out.
Okay, and the next one is FNKO.
Oh, we would have to bring this one up. I could go back to your earlier comment about getting out too early. Oh my gosh.
Yeah.
I'm going to go with a shorter chart just so I can show you this thing. This one's giving me nightmares. I try not to look back. You see this break of the 20-day moving average?
Oh, yeah.
I got out. Oh, yeah. And I actually waited until the 20-day when it went down and broke these lows. I think I probably lost 3% on the trade. And now look at what the stock has done. I mean, these things just absolutely crush your spirit sometimes.
Oh, my goodness. Big volume on that drop, too, so I can see where it would be under.
Yeah, and I really liked it. I mean, I loved their earnings. They came out, they beat estimates. You can see they went right up to this high that they had printed back at the beginning of October, failed. It's like, come on back to me. I'm waiting for you. Look at the 20-day test. I was like, oh, beautiful. 24, I'm going to get this thing all the way back down to 19. And I did. And then got out, I don't know, it was 1840 something, I think, from what I recall, getting out. And literally, I was so happy at the end of the day. It went down under 18. I was like, that's why you have stops.
And then shake you out. That's what they're there for.
Yep. And then the next day, it's like, and now look at it, holding the 20-day and rising. And my original target was 24. It's probably going to go hit that.
Oh, my goodness.
Now that I've gotten my sob story out of the way, I'm going to be done looking at this one. I think it looks pretty good, actually. It's just hard for me to comment on this one after.
Too emotionally entrapped.
Yeah.
The next one is Intrepid, IPI.
Okay, I haven't made any mistakes on this one, so I I think the clear area of resistance. Look at the volume coming in. This is a really nice looking chart in terms of the volume to support these moves to the upside. But we need a breakout over 435. I mean, when you look at the chart, you can see this one got up to 420, didn't quite get there. But this black candle, we got up to 440, had a breakout, and then came all the way back down. I think for now, we're probably just going to consolidate in this area. 360 up to about 435. Let's see which way it goes. I'm not going to buy it at $4 just because I think this is the range. And so I've got 40 cents to the downside, 35 cents to the upside. I might as well flip a coin. I don't know which way it's going to go. So I would be more interested as it gets back down closer to 360, or if it makes the breakout. A lot of volume coming in. So I think there's accumulation taking place. I like the stock. I just don't like the reward to risk at the current price.
Okay. The next one is JG.
All right, JG. This is an interesting area. Okay, it's very illiquid, so I'm just gonna throw it out there right now. I wouldn't touch it because I don't like stocks that don't trade much. I think they can be very easily manipulated, and that's really not what I want, because I can be very easily manipulated too. So I want to try to avoid that. But the move down here off the downtrend, you can see kind of like a doji here, and then we got a bullish engulfing candle. I like that because it did occur at some key support. The volume on the way down was nothing compared to the volume on the way up. So I like all of those things. I would just say simply, I think if I was in it, and again, you could be manipulated, I would probably move that up. I think that candle right there, close below 680, especially 675, would really make me nervous on the stock, because it does have an uptrend in play. It really should hold this area from this point forward. So that's what I would watch.
Very good. And then La Jolla Pharmaceutical LJPC.
LJPC. Starting to show some strength. I think $9 could be in the cards here. This is a smaller pharma, and I just want to point out and remind you, look at this big red candle. I don't know what happened that day. I have a feeling FDA came out and said something about one of the drugs maybe. But this is a company, it's a smaller company, so you can see some really wild swings. So what I always suggest with any of these companies is just be careful with your position sizing on a company like this if you're going to trade it. This is not your everyday trading candidate like you get maybe in technology and consumer discretionary, because earnings in many of these companies aren't really the key driver. A lot of times it's these test results that just come out of the blue, and stocks can go all over the place. And I don't know for a fact that that's what that was, but I'm just guessing. When a stock in this group, a small pharma, drops from 10.5 down to, loses 50% of its value in a day, a lot of times it has to do with one of their drugs. But short term, I do like to move back up above the 20-day, the 20 crossing the 50. I think we have a shot to go hit this area of the breakdown around $9.
Very good. And then Roku, ROKU.
Yeah, this is one that I was watching on the way down. I thought it was getting way overdone back in December. And of course, I didn't buy it. And I've just been watching it go all the way up. Anyhow, it did come back down below the 20-day on big volume. That makes me a little nervous. And right at the very top, you can see the PPO was starting to roll over. I think the best level on this stock is actually $55. And I'm pretty sure that's where it opened after it reported its latest earnings. And you can see the volume. So all the buyers came in at 55, drove the stock up to 65. Now that we've lost the 20, I actually like the stock if it were to get back to about that 65 area. You could put the bottom of gap support in around 51.5, 52. But these are the two really key levels on a pullback that I would watch.
Very good. And then TDOC.
All right, TDOC. So that's Teladoc?
It is.
All right. I'm looking at 70, 72.5 as being some pretty important resistance. And that's from the reaction highs we saw back in the fourth quarter of last year. And then the low we just saw in February. So I think that's going to be a key area to try to get through. Now, I'm a little disappointed that the stock went back down and failed to hold this prior low. So another move down below this low and I'd be out. I would not be taking any chances, especially if we fail at the 20 and roll back over the PPO in negative territory. That would be giving me some real negative signs here. So I think we want to be careful if it rolls back over. Otherwise, I would be looking for a test in the 70 to 72.5 area.
Very good. And another one appropriately named, WOW, W-O-W. And you look at this week's move in the stock.
Yeah, I always like these different ticker symbols, the ones that, have a little bit of personality. I was talking yesterday, I always bring up Splunk.
Yes.
Love that one.
Oh my gosh.
Still waiting for their spinoff Splat. But here we go. We got a breakout. So yeah, wow. I mean, technically, I like this breakout to the upside. Now, we did have a prior support level here that was broken. We never went back up and tested that. So I do think short term 925 you want to watch, but I think this range, and I'm okay with it actually as long as it goes down and holds its rising 20-day moving average. So I would draw the arrow in here. I mean, we went down below, we've come back up. Volume is starting to pick up. Today's volume actually is pretty heavy for this stock. 300 and almost 400,000 shares, just past the halfway point of the day. And when you look back, many days never see this kind of volume. So I think we're on pace to do probably 800,000 shares today. And that would be a very strong volume day to confirm a breakout. So things are definitely looking up here, but I would watch the levels that I annotated there along with that rising 20-day moving average.
And the last one, it should be Wowza, but it's YETI.
Yeti. Gotta like Yeti. I really like their products, and I really like their chart. Love this breakout. Doesn't have a whole lot of history. It was public just back in October of this year, but the history I see is very bullish. Once you go public, you start to set some short to intermediate term highs and lows, and I would say there was a major one with this volume. I'm assuming that was a volume related to earnings, gapped higher and then reversed, went down, set a very significant low, and traded in this range until the most recent earnings, gapped up, went back down, tested the area of the breakout, and has been off to the races. Notice what happened at the 20-day moving average. Pulls back, gets that test, and literally 5-6 trading days later, the stock's gone from 22.5 to 29. Now I would be watching on a pullback the 25.75 area. So I don't want to chase. I don't really like getting these stocks after they made these big moves. I think that's very dangerous, especially as a short-term trader. But a pullback to that 25.5, 26 area, I think looks pretty good to me. And that is your 10 in 10. And so here are the symbols that we just took a look at. Did you have any, I don't know if you were watching them that closely, Mary Ellen, did you have any comments on them? Any of them that you really liked or stood out to you besides Wowza?
I am predisposed toward that Funko. It was a big winner last year and for very sound reasons. And it's nice to see that it was able to recover. So that one stood out to me, although it's up 9% this week. Analysts are raising estimates. It looks good.
That's the one you had to point out? Really?
Oh, sorry.
I give you a choice of 10 stocks and you're going to bring Funko up again.
Oh my gosh.
How many percent was it up again this week?
Oh my gosh, please. No, that slipped my mind.
Oh, okay. No problem. I'll never remember that. Yeah, what was that one you got out of? Was it Planet Fitness?
Yes, that's your new favorite, I know.
Yeah, I really like that stock. Let me go back and see how many percent it's up. Since it barely went below the 50-day moving average.
Oh my goodness, that's horrible.
I'm sorry, I couldn't help it.
Oh,
all right, let's get into the final market update so we can finish the show off. We do have one more segment, by the way. We're not going to finish that early. Okay, let's take a look. Right now, we got the Dow Jones Industrial Average, as you can see, up 199 points. The NASDAQ up 77. The S&P 500 up 20, and the Russell 2000 up 13. So starting to see a little bit more leadership from the small caps again. We like to see that because, well, for a couple of different reasons. I like to see it because the Russell 2000 is made up of companies that do most of their business, if not all of their business, in the U.S. And so when you see that index outperforming, it just kind of gives you a little bit more information as far as maybe the U.S. economy is stronger than other areas around the world, because obviously the S&P 500, the Dow, these are indexes that have multinational companies, conglomerates that do business all over the world. So when small companies outperform these U.S. small companies, I think it's a good sign of our economy, that along with the railroads. And actually, I'll go ahead and pull up the railroads as part of this update. Missing one R. Let's try this again. But railroads have been very strong as well. You see that breakout above the prior highs, the pullback to the 20-day, and now trying to turn higher again. This is another one of those indications to me that suggests that we've got a pretty strong economy in the U.S. relative to some other parts of the world. But the bond market completely disagrees with me. I can't quite figure that one out, but I probably won't in the near term. All right, let's move into our final segment. We brought it back because everyone seemed to be really excited about it last week. Everyone liked it, so I'm assuming everyone was kind of playing along. This stock or that stock. And this is just a segment where I give Mary Ellen 2 stocks. She gives me 2 stocks, and we have to decide which one would we pick, this stock or that stock. So, want me to give you 2 first, or you want to give me 2? How do we want to do this?
Well, you have the screen. I'll go ahead and throw a couple of them your way. How about we take a look at Verizon, VZ, and another one within that same telecom space is Cincinnati Bell, CBB. And,
all right. Well, I like to compare these stocks. If they're in the same space, I like to compare them on a relative basis and just see how they're doing relative to their peers. So you can see that at first, Verizon is in a group, obviously, that has been mostly downtrending. So relative to its group, it actually looks pretty good because when you look at their actual chart, they were in an uptrend, I think consolidating and actually trying to break out above a couple of these reaction highs. So I think Verizon looks pretty good, although, again, it's not in a great group. Here's a group relative to the S&P. So it's just really hard to outperform the S&P if you're trading within groups that are not doing so. But CBB, let's see how this one stacks up. Yeah, I can tell already I'm not going to be a fan here. I do like the fact that it's bounced off the 50 and starting to turn higher, and it did show some decent characteristics, but it's so far off of its earlier high. It's got a lot more work to do relative to its peers. I see more of a downtrend relative to its peers, where I think Verizon clearly has been a better relative performer. So based on those reasons, I would go with Verizon. What would you do?
I would agree. I was intrigued with how you would respond to that very nice orderly pullback, but that turnaround doesn't have a lot of oomph to it. So yeah, Verizon, I would agree.
All right, I'm going to let you grab the screen, and I'm going to give you your first one. If I can find it on here. Oh, okay. So let's do a couple of energy names that have really, really struggled. So you're probably not going to like each one of them.
I can't wait.
Yes, Schlumberger, SLB, and Halliburton, HAL. Is there anything in the 2 of them?
Oh, my word.
Yeah, they're in the bottom of the heap, I'll tell you right now. But is there anything that you see that maybe gives you some hope on one versus the other?
Oy. Yeah, okay, I'm just going to look. So that's Schlumberger. Let's take a look at Halliburton, see if anything. Oh, my word. Where did you find these? Okay, so let's go ahead back. We'll look at Schlumberger because that's the first one that was mentioned. And we can see here the stock has been languishing, not at all participating except for a little bit here with the broader markets. And it's now broken below all of its key moving averages, and your 10-day, which is the green line, is poised to break down through the red. That's called a death cross. Unlike a golden cross in a bullish fashion, this is bearish. And we can see that the MACD is poised to head below 0. Your RSI is negative. I don't see a lot of hope for this one. I would need to see a break back above these moving averages on volume. But let's go ahead and take a look at Halliburton very quickly and see if there are any. And this one already had that negative death cross over here. Your MACD is very much confirmed as far as being below that net neutral and negative territory, as is your RSI. If I absolutely had to pick one of these, it would be Schlumberger, just kind of a lesser of the 2 evils.
Yeah, I figured you were going to struggle with this one. Yeah, I would agree with you. I think Schlumberger, and if you look at it relative to its peer group, Schlumberger is actually quite a bit off of its relative bottom that it set back in January, whereas Halliburton is quickly approaching its relative lows again. So at least on a relative basis, I think Schlumberger is starting to show a little hope. But I agree with the overall group. I mean, I got these right out of the trash heap. All right, what's the next one you got for me?
Okay, so now we're going to move into a couple of these semiconductors. The first one is AMD, well known.
AMD.
And then I'm going to have you look at that versus another semiconductor, NVIDIA. These are two bellwether stocks in that space.
Yeah, AMD kind of surprised me. I actually thought, after it broke out or tried to make this breakout, I looked for it to move back to the 20-day and then turn back higher. And I was expecting semis to do well. They were already starting to show some relative strength. And I thought AMD was one that was beginning to turn up. I think I showed that on the show here on an RRG chart. And so when it fell back to the 50-day, I was surprised. Now, it did print that hollow candle, and it was at gap support. So there are some positives there. But with the semis really rolling right now this week, breaking out, where is AMD? I mean, what is going on? Why are they not performing? And why, after having this huge relative performance to the upside, why are they declining like this? Those are questions that I can't answer. So I'm going to just leave that one on hold for now. Let's take a look at NVIDIA, because NVIDIA is starting to show much better signs in my view. Now, on a relative basis, you can see this one was really bad versus a lot of the semis, but we're starting to show relative strength. I'd really like to clear that last relative strength high before getting overly excited. And you can see that you've got overhead resistance where we have met a lot of sellers up in this 170, 172 area. And when you look at the low, the support, that was also around that 172 area. And now here we are at 170. This is a tough one for me because I do think that NVIDIA is trying to turn the corner here. But if I had to make this pick today, right now, I think I trust AMD a little bit better. And I think in another few days from now, I might change that pick. But based on what I see right now, I go with AMD. And I think you're going to go with the other. But what do you think?
Yes, you're absolutely right. NVIDIA is a little more intriguing to me. I pulled that up on a weekly. It's breaking out of a kind of a bit of a flat base, nice volume. It will have to see how it behaves at that 200-day, but near term, it looks to have a little more upside.
Yeah, definitely showing better leadership here recently. So if you're looking, we've talked a lot about relative strength on the show, and I forget who it was. It was just on here recently. I think it might have been Linda Raschke when she joined us, but she indicated that relative strength is really based on perspective. It's based on the time period that you're looking at. And so somebody who's got a very short-term perspective and looks at NVIDIA will say, hey, we're seeing some nice relative strength. Whereas if I'm looking at the longer term, and again, if I go down and show you this chart, relative to its peers and relative to the S&P, NVIDIA has been horrible the last 5 or 6 months. But if you're looking at just since beginning of or the end of January, then you can see some real leadership starting to emerge here. So again, it is based on perspective somewhat. All right, we got probably a couple more here that we can do. So let me see. I got to give you one. So I'm going to give you a couple of semiconductors as well.
All right. Okay.
And a couple that lagged but are starting to show a little bit of strength. I'm interested to see which one you like the best. Applied Materials, AMAT, or Micron Technology, MU.
Oh, interesting. Okay. All right, so I'm looking at a daily price chart of Applied Materials, and I like what I see. This company, the stock, is breaking up above this 200-day simple moving average. So a couple of actions when you're looking for downtrend and potential reversals. We can see we had this potential reversal. The markets pushed the stock back down. But more recently, it's breaking up above these simple moving averages because these are now were acting as resistance. Marking time here. Now we're up above this 200-day. You can marry that with an RSI trending upward, and your MACD never got below 0, but you're poised to have that black line up through the red, a positive crossover. So a lot of nice action happening here. If we're able to close the day, I don't like that it's losing its high for the day. It really looks as if we could have a continuation of that uptrend. And then the other ticker was that MU, Micron?
Yes.
Okay. Taking a quick look. Yeah, so Micron is not as bullish looking. It's not as dynamic. It's trapped, if you will, in this space. When you have a 200-day simple moving average trending downward, oftentimes that will be your resistance until it's not. The stock is finding support at an upward trending 50-day simple moving average, but really, even if it breaks above this shorter term 10-day, you're really going to have a lot of trouble here at this 44 level. Your RSI is not positive. MACD is net neutral. So applied material of the two is
All right,
my...
I'm gonna give you a follow-up question here because I actually agree with you. I like applied materials as well. I think it's acting much better, especially with the semis moving up. You really want to see stocks moving up when their peers are moving up, and Micron really isn't doing that. But maybe a little twist on things because I know you're more, position trader, longer term, and I'm more short-term oriented. But with applied materials, you mentioned the fact that it got up to that high and then backed off of it a little bit. Does that bother you that you're right at resistance and think, I mean, if you had to enter, would that come into play here at all because you are up against resistance?
So you're referencing this
yes.
where it did find, well, what is happening today seemingly is it's breaking up above that resistance. And once that occurs, of course, you can keep an eye out for a continuation. So rather than bumping its head up against it and finding resistance, once we break up above it, we're getting very decent volume, and you can marry the other MACD and RSI positive signals with it. This no longer is resistance. And you can see more that the 50-day is more in an uptrend relative to this prior period.
Okay. So, yeah, I think definitely resistance. I know in your mind, when you're looking at resistance, you're looking at the moving average. I was actually looking at the price high.
Oh, okay. So are you taking us back here to August maybe? Or
No, I'm talking about February. You can see the applied materials in the second week of February went up to about 41. And then that's where selling came in. And now today we get up to about 41 and we start to back off those highs. So again, we're seeing selling showing up at about that 41 level. So
I get it.
My question is, looking at where they are on their chart, and maybe I'm asking you to do something you're not as comfortable doing, which is short-term trading. But to me, I like applied materials better, but I couldn't buy it here because it's sitting right up against that $41 level. If it was trading at 42,
you'd be more interested. Yeah, that 41 level. I'm going to pull up a weekly chart on this just to give you a little more perspective. Okay. And there's another dynamic from my work that can be really quite powerful. And that, again, is that golden cross. This is your 50-day, 10-week simple moving average, and it's poised to cross up through that 200. And in essence, we can go back historically. When that occurs, what happens is at some point in time, certainly down the road, it eventually pulls up that 200-day simple moving average. But the first action is that the 10-week up through the 40-week. And then ideally you want all of these moving averages to be in an uptrend as the stock continues to trend upward.
Okay, very good. All right, well, we're going to try and do at least one or more, maybe two. So what do you have for me?
Okay, yeah, let's go over to the retail consumer space and look at Abercrombie and Fitch. ANF is the ticker.
I love this one. I already know I love this one.
Okay.
Yeah, I love that gap up with big volume. Huge move ups, continued moving higher. Relative to its peers, you can see it's broken to a multi-month high. Actually, it's probably almost a year high, going back probably 10 months relative to its peers. I'm not a big fan of the space because the space has really been struggling in 2019 and off of that late October relative high. But within the space, this is one of my favorite stocks. But what's the other one I'm comparing?
JLL is the ticker symbol. It's JJill.
All right. Oh, you are going to make it tough for me, aren't you? Yeah, I like this one too. Love that volume. And the group is much stronger, at least according to the classification here. So, wow. I thought for sure I was going to go with Abercrombie when you gave me that one. I got to go back and look at it again now. Wow. See this other gap on heavy volume, went back, filled that gap, and went back up. Now we gap again. I love that continuation. Oh, wow. How much time do we have left on the show? Oh, man. My sentimental choice was going to be Abercrombie. I'm going to go with Jones Lang, though. I'm going to go with JLL here. I think that this one, I really like the candle, sideways consolidation. I think, too, where it's situated on its chart right now, I like better than I like on A&F because it's continued going higher. I think we might get a pullback at some point. I'll go JLL. What about you?
Oh my gosh, I gave you the wrong ticker symbol because JLL is a real estate, that's Jones Lang, and it's a real estate development company, but we can still do the comparison. I had in mind J. Jill, which is a retailer, but of the two that we've reviewed, the Abercrombie is would be my pick.
All right, what is J. Jill? I'll go ahead and pull that one up real quick.
You bet. Let me just see what the ticker symbol. I don't know.
I should know this one.
It's JILL. I'm so sorry. Forgive me.
That's all right.
Threw a little wrench in there.
I don't want to pick this one either. Wow, this isn't even fair. I like, boy, this base here and then breaking out. I think with this one versus Abercrombie, I would go with Abercrombie. I just think it's shown a little bit more strength for a longer period of time than this one. I do like this breakout in the volume, though.
I'm with Abercrombie as well.
All right, I had one other one, and maybe what we can do is just I'll pull it up on my charts. And
perfect.
XLK. And XLI. So there's technology making another breakout, and I'll even stretch this out to a year. But, you know, I pulled these two up because these have been the two best performing sector ETFs since, well, over the last 3 months. So basically just before the bottom. And so there is technology, and here is industrials. You have a favorite between the two?
Hands down, technology. It's I'm super excited that it's powering out and performing so well. And as we see strength in technology, so goes the market. But technically as well, I think technology is better positioned. Now, we know that industrials are getting hit with Boeing and some of those bigger names. Yep. But even some of those transports, some names are working, some aren't. It's kind of a broken kind of a group where with tech, you can point towards some really big portions of it, software, semis, telecom, that are really on all four cylinders. So of the two, I like technology.
Okay, I would agree with you. I'm going technology as well. Yeah, that is, I like them both. I actually like to trade the aggressive sectors, and I consider both of those to be aggressive sectors. And during this rally, I think it's great that those two are that those two are leading to the upside. I think that's good for the market. All right, we're going to get into the poll here. Last thing before we wrap up the show. And I mentioned earlier, Mary Ellen, that you have some research that tells you which S&P 500 group has had the highest percentage of companies reporting earnings that beat their estimates. And the audience is saying technology, 56%. You want to share the winner?
Well, I will tell you, you have a very, very bright audience because that is the winner. Information technology, 85% of the companies that came out with numbers came in ahead of estimates. And really only 10% came in below estimates, which is really quite positive, certainly as we talked about that technology sector.
All right, one quick thing, because we got to wrap up, but which group was the worst? I think folks will be interested to hear that as well.
You bet. It was real estate, only 19%, actually a little bit more, 44% came in ahead of estimates, but it was the weakest.
Awesome. All right, and that surprised me because real estate's performed so well. But anyhow, thanks so much, Mary Ellen, for joining me today. Thanks to all of you for being with us. Please remember to complete the survey as you exit. It's located below your video player. We love to get the feedback. I really like to hear some more about this stock or that stock. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everyone. Enjoy your weekend. Be safe. We'll see you back here on Monday. Happy trading.